you have trillions and trillions. I mean, at this point, so much more debt. I mean, think about the US alone already paying 1.2 trillion a year in interest payments. And again, if we were to allocate that wasted money in interest that we're paying to, you could pay for everyone's healthcare, you could pay for Social Security. I mean, there's so many things that you could do. And essentially, debt and paying interest ends up sucking the life out of an economy. And the more debt you have, the more it weighs. Think about another bag on your back, another weight on your shoulders. And as an economy, it is unsustainable to get to these levels where we now have so much debt. There's no way that we'll ever pay it off. I mean, literally, there's no way. They're talking about a 5% billionaire tax. It doesn't even matter at this point. There's no way to really pay it off. It all ends in a massive collapse that likely the bond markets are signaling with their rise in rates. The timing is going to be tricky here, but when it does end, I do think there will be some sort of financial reset where from the dust, the government will have to take on a much more balanced budget, fiscal responsible outlook and policy. To be clear, I'm still very bullish long term. There's been no change in any of the debt scenarios that I've seen, inclusive of what we're seeing in Japan. But really, unless there was a big U-turn in the US government and central banks around the world and other governments, gold is the long-term asset, along with probably silver and other precious metals, that really will give people that security that they crave. Now, in the short term, there's a different story here. And the different story is that now in a short-term downtrend, and you can see how gold continues to react as a risk asset. And again, historically, you know this, it's really not a risk asset, so it shouldn't be behaving like one. And that tells me that people have gotten into this trade that normally wouldn't buy gold. They got into it for momentum, and it needs to flush those players out. And so I'm still overall short-term bearish. I still think we're heading down sub 4,000, maybe even as low as 3,500. But I certainly am going to be a buyer when it gets below that 4,000 marker to add to my long-term holdings on gold. That's what it is. And again, you know, anyone who's got a long-term, listen, if you're in it for a quick buck, then yes, you're going to be disappointed. But if you're in it for the long term like I am with my longer term holdings, it's just part of the cycle, right? You have these massive moves to the upside. I mean, really, we've been rising since 2022 when we were trading around 1,600. And even if we pull back to 3,500, I mean, think about this. 2-3 years ago, if someone said 3,500 gold, we would have all been ecstatic. So you have to let these cycles breathe. I know we all want to become zillionaires overnight, but charts just don't work like that. And if we look at this, right, we're only talking about a drawdown off the highs from that 2022 low of basically a retrace between 50% and 618, right? So, I mean, it's not a massive reversal. And in markets, if you look at NVIDIA stock, if you look at the S&P, if you look at even Bitcoin, these type of reversions are very, very normal when things get overdone to the upside. So think about it like this. You ran a marathon in gold. It now can't run another marathon without having a heart attack. It needs to rest. It needs to refuel. Then it will go on its next leg. Likely in the near term, it's negative. And I say near term negative because anything that starts to hurt the economy. And again, listen, these companies, because they're doing job cuts, probably will make a fair amount of money once they get through this massive CapEx spend. But think about the consumer. The consumer is going to be hurting with all of these layoffs that are now being announced. And it's just the first inning of these layoffs for AI. I'm seeing it in my business. I'm seeing it in every business out there. It's going to be bad. So to me, the consumer's not there. If you're talking about the top 10%, absolutely. People with millions in the stock market are spending like drunken sailors. They're still like, they don't even feel the inflation push. But if you look at everyone else, you know, I clearly see it. I'm sure you do too. You go to the store, you go out to eat, you go get gasoline, and it is shocking how expensive just it's gotten in the last few months, let alone the inflation that we've seen. And so you're really seeing this society that's being split even more between the haves and the have-nots. And the have-nots eventually will revolt. And again, I don't mean necessarily violently, but just there will be a point where it is unsustainable when people get pressured too much. And we are seeing that starting to happen. I mean, we order groceries in from Walmart now, and it's $200 a pop for a few days of groceries, even from Walmart. I mean, it is nuts. And I think it's important for people to just recognize again is that, you know, going back to these monumental runs is that the narratives will shape the run, right? So we heard about the discrepancy in how much silver was out there. We heard about the silver contracts not having enough silver to actually meet that. The demand, obviously, China was cutting off supply. All of those were fitting that monumental surge up. You can't chase it. I know it's in human nature to buy in and let emotion to kind of take over. But the way I look at it, and I hope people realize is that there's always another trade trade or investment around the corner, right? In a month, we'll be talking about something new. And if you just wait, it generally will turn out better than if you chase some of these massive runs. To me, this is just the normal breathing of a normal chart that it gets overdone to the upside. But I understand people that bought in north of $100, they're feeling the pressure. I mean, they'll be down 50% at that time. So if they pull back enough, I have my buy levels already for platinum. So basically anything between 17 and 1600, I become a buyer, and I'll just buy in slowly. I'm not going to go super, super heavy because the volatility in platinum is pretty nuts. But the same thing applies to palladium here. I also have this longer term major support level going back basically to 2023 that I do think palladium will come down to, and that's just below 1250. So no worries there. I mean, I think that's at least for me where I start accumulating. I was neutral to bullish for the last few months. I've now gone more neutral to bearish once we achieve this upper range. So I'd be very, very careful here. And the same thing applies with gold and silver. Weird to say with gold, but if the NASDAQ is going to come in and we're going to see, we had a 30% run in the NASDAQ. If it just pulls back 10%, you got to figure Bitcoin drops back to 60,000 or so. I think it's the beginning. So the way I view yields is that the bond market has, and the government and the central banks, they will continue to patch it up with band-aids. But what we're seeing is unsustainable with debt to GDP in the US, in Japan, and it's the whole world beginning to get more shaky on ever getting paid back from these governments that continue to borrow money. And so obviously rates are going up in comparison because these people that are still willing to buy the debt of Japan, for instance, are demanding higher interest rates. But even though we're seeing this, I don't buy that it's on the verge of collapse just yet. I think, again, the central banks still have a few levers to pull, but as an investor that has a macro longer term outlook, you have to look at this and say to yourself, this is going to end badly. The question is it a year from now? Is it 5 years from now? In general, I'm leaning towards 2029 to 2030. And the reason I say that is more so with the 100-year cycle from the Great Depression. And I think things are going to get really bad. And I'm sure Michael Gayed would agree with that. Just not sure on the timing. So, it's really a wait and see, right? And to me, I want to see, he's said all the right things. I'm going to be independent, this and that. We're not going to be cutting interest rates just to appease the president. But I want to see when he gets in there, because with yields pushing up, like we talked about, you just can't have yields continue to go up. It will eventually break this debt system that we have. And so at some point, he is going to have to say something on interest rates. I don't think he'll be able to cut because the other central bankers are not going to vote for it. But I'm very curious to see, is he as kind of pseudo hawkish as he said he would be in the testimony in front of Congress, or does he start to kind of bow to the president a little bit? And I think the markets are really looking at this because it will tell us about the independence of the central bank. Is it really still as independent as it was under Jerome Powell, or is it slowly slipping more towards a political appointment? Yeah, and this is always the trickiest thing, right? I mean, where do we allocate money? I mean, for me, obviously, I have some shorts on the NASDAQ, on the S&P right now, but that's not for everyone, and I get that. It's very scary to be short the market when we've seen parabolic, nonstop liquidity injections from the Fed that just never let the markets go down, and the same thing with the government. But for me, it's more looking at those levels on precious metals. Like when I have cash on the sidelines, I'm actively analyzing what I do like and saying, okay, if it gets here, that's where I will allocate 10%. If it gets here, I'll allocate another 10%. So it's a planning phase when you have money on the sidelines. And I think honestly, in the near term, yields probably are going to start to come back in. I don't think the government's going to let things get too far out of control without the Fed trying to intervene. And like I said, I still think maybe the bond market in the near term is still a place to protect from the stock market declines. I am a long-term bull on Bitcoin, although it's not the most popular long-term play anymore. But gold, silver, Bitcoin, I still think there's a place for all of those.